How's it going, everyone? My name is Jake with Trade Confident. Today, I'm going to be talking about some breaking economic news here. The euro has just fallen below the value of the US dollar, showing that the US dollar has gained strength while the euro has lost it. I'll be diving into the article very shortly to show what this means for the cryptoverse. But for now, if you enjoyed this video, please like and subscribe. We provide daily crypto education, content, and analysis every single day. So if you want to learn more, if you want to keep growing and learning with us, please subscribe. We'd really appreciate it. Let's dive right into the article here. A euro is worth less than $1 for the first time in 20 years. What does that mean? The euro has fallen below parity with the dollar, diving to its lowest level in 20 years and ending a 1-to-1 exchange rate with the US currency. It's a psychological barrier in the markets, and the slide in value underlines the sense of foreboding in the 19 European countries that use the euro as they struggle with an energy crisis caused by Russia's war in Ukraine. So, what does the euro and dollar parity mean? It just means that the European and US currencies are worth the same amounts. While constantly changing, the euro has dropped just below a value of $1 this week. A currency's exchange rate can be seen as a judgment on economic prospects, and Europe's has been fading. Expectations that the economy would see a rebound after turning the corner from COVID-19 pandemic have been replaced by recession predictions. This is also consistent in the United States and other countries around the world. It's not just Europe that is seeing recession signs. More than anything, high energy prices and record inflation are to blame. Europe is far more dependent on Russian oil and natural gas than the United States to keep industry humming and generate electricity. Fears that the war in Ukraine will lead to the loss of Russian oil on global markets have pushed oil prices higher, and Russia has been cutting back natural gas supplies to the European Union, which EU leaders describe as retaliation for sanctions on Russia and weapons deliveries to Ukraine. Energy prices have driven inflation in the Eurozone to a record 8.9% in July, making everything from groceries to utility bills more expensive. They have also raised fears about governments needing to ration natural gas to industries such as steel, glassmaking, and agriculture if Russia further reduces or shuts off gas taps completely. Why is the euro falling? Many analysts attribute the euro's slide to expectations of rapid interest rate increases by the United States Federal Reserve to combat inflation at close to 40-year highs. As the Fed raises interest rates, the rates on interest-bearing investments tend to rise as well. If the Fed raises rates more than the European Central Bank, the higher interest returns will attract investor money from euros into dollar-denominated investments. Those investors will have to sell euros and buy dollars to buy those holdings. That will drive the euro down and the dollar up. Last month, the European Central Bank raised interest rates for the first time in 11 years by a larger than expected half percentage point. It is expected to add another increase in September, but if the economy sinks into recession, that could halt the European Central Bank's series of rate increases. Meanwhile, the US economy looks more robust, meaning the Fed could go on tightening and widening the rate gap. So in this situation, who really wins? American tourists in Europe will find cheaper hotel and restaurant bills and admission tickets. The weaker euro could make European export goods more competitive on price in the United States. The US and the EU are major trade partners, so the exchange rate shift could get noticed. In the US, a stronger dollar means lower prices of imported goods, from cars and computers to toys and medical equipment, which could help moderate inflation. We saw who wins, so who loses in this situation? American companies that do a lot of business in Europe will see the revenue from those businesses shrink when and if they bring the earnings back to the United States. If euro earnings remain in Europe to cover costs there, the exchange rate becomes less of an issue. A key worry for United States is that a stronger dollar makes US-made products more expensive in overseas markets, widening the trade deficit and reducing economic output while giving foreign products a price edge in the United States. A weaker euro can be a headache for the European Central Bank because it can mean higher prices for imported goods, particularly oil, which is priced in dollars. The ECB is already being pulled in different directions. It is raising interest rates, the typical medicine for inflation, but higher rates can also slow economic growth. So what I'm interpreting from this article so far is that while the US dollar is becoming more robust, we're seeing major inflation and an energy crisis in Europe, which is causing high inflation there. It's causing issues, and it's causing the euro to lose its value against the US dollar. It is good news for the US economy. It shows that the US dollar is becoming more and more valuable overall, but in the global sense, we are seeing continued weakening economies. As the energy crisis continues, we could see less and less manufacturing and trade coming out of Europe due to possible rationing of natural gas and energy supplies. And with that, overall, the global economy does still seem to be suffering. I've continued to claim that I do think the overall situation is going to get worse before it gets better. Worsening global economic conditions will adversely affect the crypto market, bringing prices down as well. With that, we've got our fundamental analysis down. We could see it moves down overall, although the US dollar is doing better. Overall, the global economy is not doing that great. With that, let's jump into the technical analysis of it. We've got our direction. Where do we think it's actually going to fall? Right here, I'm looking at the Bitcoin USD top and bottom finder, last updated August 23rd this morning. Right here, we got a buy signal like we did with a lot of other coins over the weekend, with confirmations in the form of green bars on the TC market reversal metric. These are updated once a day at 8 a.m., so we are seeing the most recent data here. We are not seeing any other signals one way or the other, and for the past few days, we have continued to trade sideways. We are still very near this green line here, and we are below the midline on the TC top and bottom finder. When we are below the midline, it means that we are in a downtrend. So for now, we should be looking for moves down here, although we could see moves up after this buy signal. We already did here, so we will be keeping everyone updated with that. Really quickly before I jump into the rest of the technical analysis, I did just want to show the Euro USD chart. As you can see right here, we're at 0.99639. This is below the US dollar, although it is very, very close. Throughout the day and early this morning, we actually got as low as 99 cents, or 0.99026 cents, which is the lowest it has been in a very, 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 very long time. Let's switch to the daily chart here just to see how far back we can actually look. Like, as you can see, the euro has not fallen to this level since about 2002, as it actually claimed in the article. So I just wanted to give a perspective of what that actually looks like on the charts itself. With that, let's head back to crypto. Right now I'm looking at Bitcoin USD on the 4-hour time frame. Coinbase is the exchange I'm using. Checking out the settings here, my signal strength is set to 10. This is the default, and it looks like on Bitcoin it is just perfect. So I'm going to zoom in here a little bit. We've broken out of this, we have broken out of this bear pennant pattern that we saw over the past, months. At basically the middle of June right here is when we broke out. And we've been in this pattern since then. We just broke out over the past few days recently. We are seeing a bear flag pattern right here with the flagpole shooting down out of the breakout of this much larger bear flag. And we are sitting comfortably in an ascending triangle, which makes this a bear pennant. We are right at the top of the resistance line. We are meeting it. We've broken out a tiny bit a couple times, but the candle has stayed within this pattern. So it does remain to be seen where we're going to head next. We do have some trade volume moving upwards. We do have a lot of long trade volumes. It's not much, which shows that we could be weakening in our volume, showing a possible move down. Here I'm actually going to bring up the trend exhaustion and price versus well money flow just super quickly. Got it right there and right there. The price versus well money flow is at its pretty much topped out. It is very, very high up here. It shows that we are likely to see a move down. The trend exhaustion hasn't quite reached its top red territory, although it is shooting upwards, and we very likely will see that soon. When that happens, we're more likely to fall and reach the support level. This is a tiny bear flag. It's not honestly too bad. If we do see it fall, we will likely just meet our support. First of all, we have to finish and break out of this support level, this ascending support on the bear flag pattern. If that does break out, the first support level we're going to be looking at is right here at $20,756, followed quickly by right here around 18,988. So we could actually see this breakout. Right now we're just accumulating, but if this breakout continues from this major bear flag into this smaller one, and if it breaks out of here, we could see a big move down to around that $19,000 level, bringing us back below 20,000. There is going to be really strong support at 20,000, so we will be paying attention to that. But this could be a worst case scenario. We could fall back below $20,000 as global economic conditions worsen. We did get a buy signal here on the 4-hour chart. It does coincide with trend exhaustion's fall, but the price versus well money flow is still high, so I personally would be suspicious of this buy signal. I personally wouldn't enter here. For now, I would actually be looking and waiting at least till we hit the support level to actually enter any trades. Realistically, though, we have only been in this pattern for what is really truly is only 4 days here. So we don't really have enough on the daily time frame to call an actual signal. It is good on the 4-hour time frame here. It is within 22 candles. I already measured it, but I'll do it right here again. Just from here to here, you can see 23 bars. That is considered most bear pennants do break out within 21 candles. We're gonna have to wait on the 1-day chart to see how that actually plays out. For now, we only have 4 actual bars. I'm gonna delete that so it's easier to see. We only have 4 candles here, so this may really only be an accumulation pattern with a continued move down coming soon. So to sum everything up real quick, the euro has fallen below the value of the US dollar, showing a weakening euro and generally a weakening global economy. And it fell even despite the US economy seeing massive inflation that we haven't seen in a very, very long time. So to see it fall even faster than the US dollar in value is not great news. It just shows that there is global worsening economic conditions. And as economic conditions fall, as things get worse, we're going to see that effect on the crypto market as well. Again, I don't think we've seen the bottom quite yet, and I'm hoping to see some good news soon, but it hasn't happened yet. With that, thanks so much for watching, and right now I'm just going to show you how to gain access to all the tools that you saw in this video. What you're going to want to do is check out the link in the description below. It will bring you to the Trade Confident website over here. You're going to get started trading with us. You're going to check out our scalping record right here. We are 11 for 11 with an open trade currently. We're not going to click on this because it is for members only. We have outperformed the S&P 500 by 440%. We've made a 44% profit in 97 days. So in just 3 months, we have severely outpaced the S&P 500, and this is great, guys. Our trades are doing really well, and we're excited to keep trading with you. If you want to join the membership, you're going to watch the strategy video here just to make sure this is for you. You're going to grab your membership by clicking this link, and then you're going to join the Telegram after you join the membership by clicking this link here. This is where you're going to get all of your trade alerts. Now, very, very important, our live Zoom meeting is happening this Thursday. It is only available to Trade Confident members, so if you'd like to talk to us, if you'd like to have fun with us, trade with us and learn with us, get company updates and all that, you're going to want to get the membership so you can join that live Zoom meeting this Thursday. With that in mind, thanks so much for watching. Remember, trade safe, trade confident, and I'll see you in the next video.